And there you have it. The markets are officially closed on this Friday, January 17th. Welcome, investors and traders. This is the weekly market report. I'm AJ Monte, and just as a quick reminder, the markets will be closed on Monday in honor of Martin Luther King's birthday, so keep that in mind. For you option traders, you get a little bit of a bonus with regard to time decay. We'll get to that in a moment. Now, before we get started with the forecast for next week, I would encourage you to go back and listen to the midweek report that went out on Wednesday. The reason I tell people to do that is so you could see what the candles look like at the time that report went out, and then you could see how the markets played out since Wednesday. And what I did say on the diamonds, I said we could go a little bit higher and possibly test that high right there. I highlighted that as a resistance area, and guess what happened? That's exactly what we see here. The markets went up just a little bit, not on super high volume, but the volume yesterday was a big drop in volume, almost 50% drop from what we saw on Wednesday. And so with that drop in volume and the gap below the market, I do believe we're going to go lower. Now I have two downside targets that I'm going to put for DIA. First is going to be the gap fill point right here, and that is going to be from the gap that was left on Wednesday. You can see Tuesday we closed with a high of 425.51. That's going to be my target right there, 425.51, which would close the gap, and then Wednesday we gapped up. Take a look down below. We have an overbought condition on the stochastic and an overbought condition on the CCI. So that is for DIA. Last week, we put a downside target on IWM right there. We did hit that right out of the gate. And again, on Wednesday, when I put out the midweek report, I said we would most likely go up a little bit to test that high. That's exactly what happened. In fact, the markets opened up on that high and then traded down throughout most of the day. So my downside target now for IWM is the same. We're going to put that down to the gap fill down there. Let me get the permanent line to draw for us right there. I'm going from this level here to the gap fill right here. That gap will be filled at 220.23. So that's my downside target, 220.23 from the high right here on Tuesday. So that's IWM. Watch out below. Looking at the Qs, again, the value you get from going back and looking at the candles the way they were on Wednesday, and then looking at what I talked about with regard to the downward sloping trading channel. We still have a downward sloping trading channel right here. You could take two parallel lines, draw them, there you go. Textbook trading channel. So we have a hanging man today on the Qs. That is also with an open gap below the market. So I'm going right back down to that open gap from the high on Tuesday. That is going to be 510.16. So $510.16 is my downside target. I do expect a drop in volume on Tuesday, and I have more information to put out towards the end that might concern you regarding what's going to happen or could happen on Inauguration Day. So on Tuesday, we might get that drop in volume. And then again, if we have activity on Monday, we could see a big volume spike, but that volume spike would most likely be attributed to a massive sell-off in the market. So again, downside target is going to be at the gap fill point right there, 510.16. Looking at SPY, take a look at that. We have a spinning top right at that high resistance. Again, on Wednesday, I said we could go up a little bit more to test that high. We did that exactly. A spinning top is a small body candle that is a sign of indecision. You can see here is a spinning top. Here is a spinning top. Spinning tops are very closely related to dojis, which are also signs of indecision. So while the spinning top could be either green or red, it does not matter. We generally see those at pivot points. Dojis, on the other hand, if you take a look back here, here is a doji. A doji has no color to it because the opening and the close are exactly the same. Those two are most often found at pivot points. You can see this is very closely related to a doji. It's a spinning top, but look how close the opening and the close was. And those generally signal a sign of indecision. That's why we get them at pivot points. So I do believe we're going to go lower in SPY. I'm not even waiting for the drop in volume. I'm going down not as far as the open gap, but I'm going down to this moving average here. So SPY downside target of 590.63. Again, this is a resistance area right there, almost exactly to the high that we saw here on January 6th. So keep an eye out for the downside. Looking at the VIX, remember I put a pretty aggressive upside target on that. I also stated that there was a possibility the VIX could go a little bit lower. It did that. You could see that little green candle followed by, guess what? That is a hammer candle. A hammer candle is a small body candle, very similar to what we see in a spinning top. However, the shadow underneath the candle is 1.5 to 2 times the length of the body. Hammer candles are bullish 80% of the time, hence the reason why I'm keeping that aggressive upside target on the VIX right there at 27. Now, we were talking about SLV. SLV sold off quite nicely today, came very close to filling this gap down here at 27.31. Just so you know, I will be putting out a post on X when I buy that stock. I'm looking to buy it back right there at 27.31 at the gap fill. I'll put a chart out when it's time to buy it. I'll let you know when I am buying it. And the reason I would be buying it down there is because that would be right above that 20-period moving average, which would act as support if you're looking to establish a new position in silver or looking to build on your existing silver position. Well, if you've been following us for some time now, you know I put the 7-point trading checklist together for our members, just like what I've done on this report. I look for the type of candle. If it's bearish, I put a check mark in the bearish column. I look at the volume. I look at the moving average and how the price relates to that moving average. I look for gaps below the market. Bearish, bearish, bearish. Stochastic overbought, that's bearish. CCI overbought, that's bearish. Looking at roll reversals in the form of that moving average, bearish, 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 all the way down. I don't see any buy signals there, folks. And so that's how I use the trading checklist. You could use that on any ETF, any index, any individual stock. You could use it on Bitcoin, cryptocurrency, it doesn't matter. And by the way, thank you so much for liking and following us here on this channel, because YouTube analytics gave us some good news that our views are up 17%. More regular viewers are choosing to watch this video, and they're watching longer than usual, helping to increase its reach on YouTube recommendations. That, combined with your liking and your commenting, and of course hitting that notification bell, is a big deal. You are absolutely helping us build this channel, and thank you so much. The number of subscribers are rolling in. We're approaching 12,000, which is a pretty big deal for us. Thank you so much. Thanks to you and sharing that video with your friends and family and on your social media pages. So we have all of you to thank for that. Well, one of the biggest bits of news this week came in the form of Apple. Apple is now down almost 12.5% from the beginning of the year. And what's happening with the price action is very interesting, because yesterday we closed below that 100-day moving average. And now that moving average is going to act as resistance, as well as all the other moving averages. You can see here the 50-day, which is colored in green, and the 20-day simple moving average colored in blue, are all going to act as overhead resistance. Today, if I hop back to the chart on Apple, you can see that we closed with another red candle. The oscillators are still going down, so we had absolutely no reaction to a bounce, or even what some might call a dead cat bounce. So Apple is still in trouble. China sales are dropping. China has also warned that they're not really very happy with Apple's progress with AI. That's putting the kibosh on sales in China. I think the fallout could be as severe here in the U.S. as well. And that could also hold true for Tesla. I'll comment on Tesla next week, but Tesla does rely heavily on what happens in China. And I've been saying this for now years. Keep your eyes on China. Keep your eyes on China. And when you get tired of hearing me say, keep your eyes on China, I'm going to tell you again, keep your eyes on China. The Chinese economy is failing miserably, and that fallout will affect the entire world. So watch out for that. Now, moving right along, we have some good news. Grandpa Bob has his 13-month-old granddaughter, Neela, is learning how to trade. And I'm telling you something, this is so exciting. I have to say that Neela is going down in the books as the youngest student here at Sticky Trades. Bob is one of our VIPs, and he sent me this photo getting full permission from his daughter to post this and mention her name, first name only, of course. But Grandpa Bob is doing a great thing, acclimating his granddaughter to the charts. She has no idea about money. She might not even know the difference between red and green at this point, but I'm sure as she gets older, she will absolutely know about the charts and how to trade the market. So congratulations, Grandpa Bob. First grandchild, Neela, is learning a lot already. All right, so here's some of the more serious news. Housing defaults have skyrocketed. This is unlike anything we've seen in a decade. You can see the delinquency rate of multifamily housing is going through the roof. Now, what I find most interesting is that usually when this climbs, we are already in or even coming through recessions. Notice we don't have any recessionary activity on this chart. I do believe we're already in a recession. I think we're going to hear a lot more about that in 2025 as Donald Trump takes office on Monday. I think they're going to dump the whole thing right in his lap, and you're going to see more accurate reporting with regard to economic growth and economic reporting. So keep your eyes out for that. If you look at some of the other data right now that's coming out, the cost of buying a house. Why do you think there's a delinquency increase here on multifamily housing and even on residential housing? Well, that's because the cost of buying a house has literally exploded. Take a look at this, folks. The 2024 mortgage payment is averaging $2,757 a month. Now, that is averaging, and you can see that if you look at this chart, this is going much, much higher. You know, we have a lot of data coming out. If you dig a little bit, turn off the television, do your own homework, you're going to see how significant this really is. Another one is home buying conditions have collapsed to levels never seen since 1960. Right? Let that sink in, folks. People just don't feel like buying homes at these elevated levels. So a lot of folks, and you could talk to any of your local realtors, they're telling you people are waiting. What are they waiting for? They're waiting for interest rates to drop, if in fact they do that at all. They're waiting because they want to get a more affordable payment on their mortgage payment. And I don't see that happening right away. In fact, I think interest rates are going to continue to climb. That's going to put a hurting on home sales, I'm sure. But the good news for you realtors out there is that it's thinning out the pack. Those who could stick it out through a tough time like this in the real estate market are going to reap the rewards when things start to lighten up and brighten up in the real estate market. So hang in there. Don't lose hope. Everything has a cycle. The markets, real estate, interest rates, buying conditions, everything cycles around. So hang in there. All right, another thing you want to look at is government bonds have broken below a 40-year uptrend after experiencing one of the most painful bear markets since 1980. You know, technical analysis is something that you could apply to any chart. Yeah, that's a 40-year trend line that is now broken. You could see as I magnify this, the line is now pivoting lower. Now, in 2025, the Treasury has to more or less refinance their debt. And what that means is they're going to be issuing new bonds. And the world knows that the U.S. is in trouble with regard to controlling their spending, right? It's out of control. And let's see what happens when Elon Musk and Vivek Ramaswamy get in there. But there's going to be a lot of government cuts coming down our way that's going to shake up the employment numbers. I'm sure you have a lot of the bureaucrats are going to be kicking and screaming, especially when Donald Trump takes office. So I'll get to that in a minute. But you could see here that that is pivoting lower. So in order to make the bonds more attractive, they have to lower the price. And when bond prices drop, guess what? Interest rates go up. and the cycle continues. Special thanks to Bravos Research, formerly known as Game of Trades. They put out a lot of these charts that we're looking at right here. And if you go on Twitter, you could find them, Bravos Research. So thank you once again for helping us out with the numbers. All right, like I said, Monday is a holiday closed for Martin Luther King Day, but it's also Inauguration Monday. What we found out, I find, is very, very curious in that former Presidents Obama, Clinton, and Bush reportedly will not be attending Trump's inaugural lunch. Now, this raises a lot of red flags for me. Why is that? Well, here's why. Now, connect the dots with me. Don't get spooked. I'm just doing what I normally do. I'm projecting out. I'm not forecasting that there are major things going to happen on Monday or terrible things, but the authorities have already mentioned a potential violence, especially on Monday. And so as Washington prepares for this big event, again, I find it very curious to know that these former presidents are not going to be attending. The big question mark is, do they know something that we don't? Is this just their advisors telling them it might be safer for you to stay home, being that Trump is such a target? We don't know. Again, a lot of question marks circulating around there. But I do know that eventually there's going to be something that shocks the market lower. I'm not going to say it's this or any other black swan. Usually black swans come in without you even knowing or expecting them, but this certainly raises a lot of flags. And so keep your eyes open, keep your head on a swivel, make sure you have the television turned off and your charts turned on, because like I said, I'm putting out the red flag warning over this weekend. It might be nothing, and then again, it might be something. And if it is something, it could be something big. If it is something big, our option traders are already hedged to the downside. If you want to learn how to trade options and make money on the way down, then subscribe to Sticky Trades for the free 15-day membership. It costs you absolutely nothing. Zero, zilch, nada. It doesn't cost you a single penny. And we do that intentionally to help people learn what we're doing without any sales pressure or anything like that. Come on board for 15 days. Listen to the recordings. You'll have access to everything that our regular members have access to. And with that, I'm going to wish you a great long weekend. Folks, thank you so much for following and liking and doing all that great stuff that's getting us on the algorithm. It's helping us grow our channel, and we're looking forward to the next report. So long.